Welcome back to the Deep Dive. Today we're tackling this stack of documents from C3.ai. Just dropped May 28th. It's all about their fiscal year 2025 results and, business updates.
Right. Lots to unpack here. Financials, partnerships, tech stuff.
Exactly. So you send over the materials, and our goal here is pretty simple. Pull out the key numbers, the main business moves, what's new with the tech. Basically give you a clear picture of where C3.ai is at and maybe where they're heading.
Let's jump in.
Okay, so financials first. The big picture for the full fiscal year 25. Total revenue, $389.1 million.
Yeah, and that's up, what, 25% from the previous year? They did $310.6 million then? So decent growth on the top line for the year.
And the subscription piece of that. Still the main driver.
Right, absolutely. For the full year, subscription revenue hit $327.6 million. That's up 18% year over year. Makes up like 84% of their total revenue. Pretty standard for a SaaS-type model.
Okay, but then drilling down into just the last quarter, Q4 of FY25, the overall revenue growth actually looked a bit stronger there.
It did. Total revenue for Q4 was $108.7 million. That's a 26% jump compared to Q4 last year. So, yeah, a bit of an acceleration.
But interestingly, the subscription revenue growth in Q4 was slower, only 9% year over year.
Yeah.
$87.3 million. It dropped to 80% to total for the quarter.
Right. And this is where they introduced, or at least highlighted, that combined metric. What was it called? Subscription and prioritized engineering services revenue combined. Bit of a mouthful.
Yeah, that one. And that number tells a slightly different Q4 story, doesn't it?
It does. Combined, that was $104.4 million in Q4, which is 96% of the total. And that figure was up 22% year over year for the quarter. So it suggests that engineering services piece picked up some slack, maybe?
And for the full year, that combined number was $370.7 million, also up 22% year over year, 95% of the total.
We should probably quickly explain what prioritized engineering services are based on the docs.
Good idea.
It sounds like customers can pay C3.ai extra to speed up development on specific features they really want. But the key thing is, once C3.ai builds it, it gets rolled into the main platform.
So everyone benefits eventually. It's not just custom one-off work.
Exactly. It becomes part of the core product available to all subscribers. So it's kind of like customer-funded R&D that accelerates the roadmap for everybody.
Got it. Okay, let's touch on profitability, or, losses. They give both GAAP and non-GAAP figures.
Right. The usual setup. Non-GAAP typically pulls out things like stock-based compensation, maybe some other non-cash items, gives you a different view of, let's say, operational performance.
So for the full year, FY25, the GAAP net loss per share was $2.24.
And the non-GAAP loss, significantly smaller, $2.41 per share.
And just looking at Q4.
Q4 GAAP net loss was $2.60 per share, and non-GAAP loss came in at $2.16.
They also mentioned gross margins. Non-GAAP gross margin looked pretty healthy, 69% for Q4 and 70% for the full year.
Yeah, strong margins. And one last key financial point, cash. They ended the fiscal year with $742.7 million in cash, equivalents, and marketable securities.
Okay, so that's a solid cushion. Gives them flexibility.
Right.
All right, so we've got accelerating top-line growth in the quarter, strong gross margins, ongoing losses, but plenty of cash. Where's the growth actually, coming from? What's driving it?
Yeah, this is where the story gets, I think, really interesting. The business updates really emphasize two things: diversification and the power of partnerships.
Diversification beyond their traditional oil and gas base.
Exactly. That's a major theme. The sources specifically call out that non-oil and gas revenue accelerated. It grew 48% year over year in FY25. That's pretty significant.
Wow, 48%. And they mentioned operating across 19 different industries.
Yeah, 19 industries over the year. So they're definitely broadening their reach. That's not just an energy play anymore.
Okay. And you mentioned partnerships. That seems crucial if you're expanding into that many verticals.
Absolutely essential, I'd say. They highlighted a few key ones: renewing and expanding the Baker Hughes relationship. That's obviously core energy, but focusing on co-selling, co-investment, scaling solutions.
Then there was McKinsey. That sounded interesting.
Yeah, they closed their first joint customer agreement with McKinsey. And maybe just as important, part of that involves training hundreds of McKinsey's AI engineers at Quantum Black.
Oh, interesting. Embedding their tech and approach within McKinsey's own consulting engine.
Could be. And then there's PwC, another big strategic alliance formed. This one's aimed at boosting AI adoption in financial services, manufacturing, and utilities.
So, big names, strategic focus areas. Are these partnerships actually translating into deals?
Seems like it. The numbers are pretty telling. In FY25, they closed 193 agreements through partners. That's up 68% from the year before.
And that accounted for nearly three-quarters of all agreements, 73%.
Yep. And check this out. Partner-supported bookings in just Q4 grew by 419% year over year.
419%. Okay, that's not a typo. That suggests the partner channel is really starting to fire on all cylinders.
It really does. It looks like that strategy is hitting an inflection point.
They also shared a couple of specific customer stories, which always helps make the tech more concrete.
Yeah, the Defense Logistics Agency, Energy One, was impressive. Using the C3.ai Piolito tool, built on their agentic AI platform, by the way, to manage this massive global fuel supply chain.
Go massive.
We're talking nearly 2 billion gallons a year across over 600 locations. The platform is helping with visibility, risk forecasting, managing inventory. That's complex stuff at scale.
Definitely a strong validation point. And the other one was totally different, the USC Showa Foundation.
Right. A really powerful but very different use case.
Yep.
They're using C3 generative AI to process this enormous archive of over 30,000 multilingual Holocaust survivor testimonies.
And the impact there.
This is where you see the concrete benefits C3.ai is trying to highlight. They estimate that AI will save the foundation potentially 10 years of manual effort.
10 years, wow.
And up to $33 million in associated costs. Plus, it makes the entire archive instantly searchable using keywords. That unlocks incredible value from that historical data.
Yeah, that kind of efficiency gain and cost saving is exactly what enterprises are looking for when they consider AI investments. Okay, so speaking of the tech enabling this, what specific advancements do the sources mention regarding their generative and agentic AI capabilities?
They detailed a few interesting developments. One was called omnimodal parsing.
Omnimodal parsing. Sounds complex. What does it do?
Think about all the junk data formats in a typical company, right? PowerPoint slides, Excel sheets, audio files, videos. It's everywhere, unstructured. This tech is designed to pull the content and metadata out of all those different formats and organize it into a structured knowledge graph. So suddenly, all that previously siloed, messy data becomes searchable and analyzable together.
Tackling the data chaos problem head on. What else?
They talked about a dynamic planning agent with multi-agent collaboration.
Right. Sounds like it goes beyond just finding information.
Exactly. This is about AI that can perform multi-step reasoning. It can look across different data types, and here's the key part, coordinate with other AI agents.
Agents talking to agents?
Yeah. The idea is to automate more complex tasks or workflows that usually need a bunch of back and forth between different people or departments. Think automating entire processes, not just steps.
Interesting. That feels like a step towards more sophisticated automation. They also mentioned improving things for developers.
Easy agent and tool authoring. Basically making it faster and simpler for developers to build these agents or add new tools or data sources for the agents to use. Like integrate a new tool in minutes, they claim. Speeding up development is always good.
And on-the-fly custom visualizations.
Yeah, this one's about accessibility. You ask a question in natural language, like you're just talking to it, and the AI can automatically generate a relevant chart or graph based on the context right then and there. No need to export data, fire up Excel, build a chart manually. Just ask, get visual.
Okay, speeding up analysis. So how is this translating into what customers are actually buying or deploying?
Well, looking at the bookings mix for FY25, the traditional AI applications still made up the vast majority, 95%. The newer C3 agentic AI platform was about 5% of bookings.
So still early days for the agentic platform in terms of direct bookings, but it might be underpinning some of those applications.
Could be. And when you look at initial production deployments in Q4, the industry spread was wide again. State and local government, manufacturing, federal defense, aerospace, chemicals, hospitals, healthcare, energy utilities, retail, pharmaceuticals. Pretty diverse.
And the generative AI deployment specifically. Similar pattern.
Yep, similar diversity. State and local government and federal defense aerospace seem to be pretty significant chunks of those initial Gen AI deployments in Q4 and for the full year. Government seems to be an early adopter area.
Interesting. And what about the size of the companies adopting these?
The Q4 initial production deployments happened across various company sizes, but there was definitely a concentration in the larger enterprises. Specifically, companies in the $1 billion to $10 billion annual revenue range, and the really big ones, over $100 billion.
That makes sense. Big companies often have the bigger, more complex data problems, and frankly, the resources to invest in these kinds of platform solutions first.
Yeah. Probably.
Okay, so with all this momentum, particularly the partner growth and tech advancements, What are they saying about the future? What's the guidance?
All right, looking ahead. For the next quarter, Q1 of fiscal 26, they're projecting total revenue to land somewhere between $100 million and $109 million.
Okay, and what does that mean year over year?
That translates to about 15% to 25% year-over-year growth. And on the profitability side, the non-GAAP loss from operations for Q1 is expected to be between $23.5 million and $33.5 million.
Got it. And for the full fiscal year 2026?
They're guiding for total revenue between $447.5 million and $484.5 million. That keeps the same year-over-year growth range, 15% to 25%.
And the expected loss for the full year?
Non-GAAP loss from operations guidance is between $65 million and $100 million for FY26. So continued investment, continued losses expected on that non-GAAP basis.
And it's worth noting, the source material explicitly mentions this guidance assumes geopolitical stability.
Right. The standard caveat, maybe, but they called it out. Any major instability could obviously impact things.
So their key priorities for FY26 seem to follow directly from what we've discussed.
Pretty much. The sources list, penetrating new accounts, continuing to expand into new industries, really leaning into those alliance partners, McKinsey, PwC, Baker Hughes, etc. And of course, pushing the tech forward, especially in generative and agentic AI.
They also highlighted a new board member, Ken Goldman.
Yeah, Ken Goldman seems like a significant addition. He's got a heavy-hitting finance background, CFO roles, board seats at places like Yahoo, Fortinet, Siebel Systems, deep enterprise software and finance experience.
Bringing someone like that in probably signals a focus on, financial discipline and strategic oversight as they navigate this growth phase and continued investment.
Makes sense. It feels like they're trying to reassure investors about financial stewardship alongside the aggressive growth push. The materials kind of reiterate their core investment pitch. Strong platform, growing ecosystem, market leadership claims, experienced team.
Okay, so let's try and wrap this up. What's the big picture takeaway from all these updates?
I think you see solid revenue growth overall for the year, with that Q4 acceleration hinting at momentum. Critically, that growth seems increasingly driven by diversification away from just oil and gas.
And the partner strategy looks like it's really starting to pay dividends. That 419% growth in partner bookings is hard to ignore. It seems key to unlocking those new industries.
Totally. And the customer stories like DLA managing fuel supplies or the Showa Foundation archiving testimonies, they provide tangible evidence that the AI tech can deliver pretty significant measurable results. Real ROI stories with saved time and money.
Right, so the picture is one of an investment, right? They're projecting ongoing non-GAAP losses, but they're clearly channeling funds into growth areas.
Yeah.
New markets, that partner ecosystem, and advancing the core tech platform, especially around Gen AI and agentic AI.
It's that classic growth stage balancing act, investing heavily now, leveraging partners to scale, banking on customer success to fuel future growth, all while managing the burn rate.
And that push towards agentic AI, automating workflows.
Yeah.
That feels like the next evolution beyond just using Gen AI for search or summarization.
Yeah, exactly. Which brings us maybe to a final thought for you, the listener, to chew on.
Go for it.
Given these advancements, C3.ai is highlighting parsing all kinds of data, multi-agent collaboration for complex tasks, instant visualizations. How might these capabilities really change typical enterprise workflows, not just finding info faster, but actually automating chunks of work that currently bounce between different teams or systems?
Yeah, thinking beyond search, how could coordinating agents actually automate, say, a multi-step approval process or a complex data reconciliation task that currently takes days and multiple people?
Exactly. What processes in your world could be reshaped if that agentic capability matures? Something to think about.
Definitely something to consider. Thanks for joining us for this deep dive.